Oh, that probably what it was. Uh, that's probably what it was. Mm, that's what it was. No wonder why. No freaking wonder why. Okay. All right. Damn. Damn, bro. Damn. Nah. Shit. Hell no. Hell nah. Nah, this is just a pullback. I'm confident that this is just a pullback. I'm confident that this is just a pullback. Oh, this is a 15-minute imbalance. Why did I got this as an order block? This is an imbalance. Let me switch this. That's a 15-minute imbalance. Well, this was the order block right here. At the market, we did see the market kind of bounce at the bottom of it, and then it just kind of just collapsed even further. The first attempt to fill that gap is a trap. Say it with me now. The first attempt to fill that gap is a trap. I don't think the market fills that gap the first time. I don't believe it does that. Our boy Alfred already made his money for the night. Congratulations to Alfred. So I mean, we definitely have a bunch of yeah, I'm not gonna do this every time. 15-minute imbalance, because I mean, only thing I care about is the 15-minute imbalance and then the hourly imbalance. Mm. That's all. Yeah, all I care about is the 15 and the 1 hour imbalance. maybe the 4-hour imbalance. Maybe we really don't get too many 4-hour imbalances like that. And when we do get a 4-hour imbalance, we should definitely pay attention to that area for sure. This was a 4-hour imbalance right here, and from what it looks like, the market came back and tapped right into this 4-hour imbalance, and we saw the market reject here. So we usually don't get these, but when we do, we should definitely pay attention. I guess what I don't like about this one is that it didn't fully pull back to that 50% of that. And if you tapped in at the bottom of it or the top of it, it was only it's only 10 points of drawdown, I guess. You talking about earlier? It does appear that we have a 4-hour imbalance here. I wonder where the 50%'s at on here. You know, when the imbalance is this big, I don't particularly care to. Look at that. Well, 796. I don't like when the imbalance is this big. It's really uncertain where the market could particularly bounce at, because sometimes it'll bounce at that 50%, sometimes it won't. I like to just have these normal sized imbalances where the market can easily pull back to that 50% at the minimum, and we can see a reaction like these, and especially these big order blocks like this. Yeah, like I said, I don't believe the market is going to fill that gap initially. We all know the first attempt to fill that gap is a trap. So I think we will probably see the market get kind of close to it, and then we'll probably see a reversal, and then the market will probably come back and fill that gap afterwards. And if it does fill that, I think we probably might see the market probably push around 620. 620 might be that level. 625, 620 might be that level, because that was the area where everything kind of lined up. You had the 1-hour imbalance, the 15-minute imbalance stacked on top of each other, and the 50% of the 15-minute imbalance is coincidentally the high of the 1-hour imbalance. So this is not financial advice. If you're going to take this trade, you are taking it at your own risk. But I plan on probably setting a limit down here as well. Actually, I'm not going to take it in my trade of, I'm not going to take it in my take profit account. Oh shit. I'm going to take it in my Tradeify account. And with my Tradeify account, why do I have it like that? Why do I have it like that? My Tradeify account will be all high risk trades. That's what my Tradeify account will be used for. I'm just going to set limits and I'm going to see what happens. That's it. Yeah, I didn't know that. Okay. All right. So let's see. I do plan on participating in this area right here. I think 750 is a good area for a potential long. I believe 750 is a good area for a potential long. We had a lot of heat on Bookmap around this area. You look at Bookmap real quick. You can see that we have a bunch of heat just resting down there. Bunch of heat just resting down there. We are coming into this area right here. We can see that there are sell orders right there. And on top of that, we have the trend indicator telling us that if the market breaks this area, it's going to break the trend and create a new uptrend. So the bears are definitely have incentive to protect this area right here, because we've seen this so often. Once the market breaks that structure to the upside, we're going to see all those stops getting ran. We can potentially see a pullback into this area, and then we can see a continuation. It does look like the Nasdaq has a bunch of resting limits at 900. I am interested to see if we actually see a move up here. And then it also looks like we have some more buy orders sitting around 950, and then as you go higher, we still all have that liquidity sitting at 30K. So there's still people in this that are looking to get out at these highs. So we'll see what happens with that. See. Right now, the market is rested. I mean, look at all these imbalances just stacked on top of each other. 1 hour, 15-minute nested in a bigger 1 hour that's stacked on top of a 4 hour. So we have all this imbalance right here, and it looks like the market wants to pull back and rebalance this area as much as possible. And I think that's the price action we're getting tonight. Once the market failed to take out those highs and see the move past 30K, it only makes sense for the market to seek liquidity at these lows if they're not going to take out the highs. I mean, it's just natural. I do see price kind of playing around in this. I guess this is what you would consider. So we did see price break through this order block. We'll see if the market actually turned this order block into a bearish order block. So this was a bullish order block. We did see the market move higher from this area. We did see an initial reaction. The market breaks this order block. We'll see if this is going to become a bearish order block. But it does look like the market is pushing higher here. So I mean, that's just how it is. Honestly, I don't know. If the market breaks above this order block, if we do see a bounce here at this area, I'm unsure where the market could go from here. Damn. Damn, dude. Damn, that means that was like basically 7 days. Literally, or not 7 days, 3 days. I wonder how the hell it got to that point. When is today? Monday? That was basically 3 days. Well, ah, shit. 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 Yeah, what's up, Tony Gold? What's up? Mm-hmm. Hmm. I wonder. I wonder. Honestly, I mean, it might just it might just get to that point. So we basically have the market bouncing around that 50% of the 15-minute imbalance from yesterday's open. So if you open up a long position here, 31, so 41, so right here would be your 10 points in this area. Yeah, it seems like the Nasdaq and gold are back to being besties for real. You know what, Alfred? Like I said, I think this is just a pullback. This is just a pullback. I don't believe that the market reverses here. If you didn't get short at the highs, in my opinion, I feel that you missed a short and that you should look for a long position, in my opinion. You should look for the long. I will accept that bearish price action happens, but I won't take it serious for sure. So the 50% of that is 860. Damn. Let me just clear that out. I haven't watched Nasdaq. Yes, I don't know. I just won't. Hey, yo, what's up, Dennis? I haven't traded a Ninja competition account in a while. In my opinion, I feel competition accounts are just practice accounts. And one of the biggest reasons why I haven't joined a NinjaTrader competition account is because these guys, the ones that are at the top, they're using bots, and unless you have a bot yourself, you're competing against something that doesn't sleep. It will execute. It will get in, get out. Bots just execute. I mean, a well-engineered bot will make you a lot of money. And it's always executing. So I feel that if you're not trading a competition to kind of get better, if you're actually competing, honestly, I won't even waste my time. It's my opinion, though. But I'm not going to waste my time with that, because it's not humanly possible to make $50,000 as an example in a couple of days. That is not possible, especially if you're trading one, because a lot of these competitions have like a limit on how many contracts you can use. If I see someone is already up $50,000 on the first day, okay, all right. That's not necessarily humanly possible. That means that trader would have to have been trading the entire day, catching every bounce back and forth, which we all know that that's highly unlikely. So again, in my opinion, if you're trading these competition accounts just to practice, just to have an account to trade, then I would recommend them. If you're trying to compete with these accounts, I wouldn't recommend that. I wouldn't waste my time, and I don't. And a sidebar from that, just imagine if you did make what, 10,000, 20,000, 5,000. You took the time to make all that capital in those competition accounts, and you can't take anything from it. You can't withdraw that money. I mean, that's like the double-edged sword with these comp accounts. You make so much money in these accounts that same effort could have been put toward a funded account, a personal account, and that could have been money that you can control and you can withdraw. And you know what, Dennis? What I continue to find to be the truth, And the reason why a lot of traders fail to get to that payout and they fail to be consistent is because instead of having their setup, their A+ setup, whatever the setup that you want to trade, a lot of traders just take anything off of the impulse. I feel that the market is going to do this. I feel that the market is going to do that. They get into a position and then they begin to hope. That's more feelings. And then when the market doesn't go their way, they begin to trade on tilt, which is more feelings. What I found is those that take the time to find their strategy, stick to that strategy, and accept the outcome and have risk management and basically trade a system. Those are the traders that are successful in the long. Hey, what's up? Trade, travel, eat, pray, love. Hey, what's up, Cave Trader? What's up? And I'm glad to have you here. You know, honestly, that was for a while. That was one of my biggest obstacles that I had to overcome. I still kind of go through that somewhat, but I have a strategy, I have a system, I stick to it. The only thing that is just challenging about my system is, should I trade the top, should I trade the middle, or should I trade the bottom? That's the only thing that I have a challenge, because you really don't know where the market is going to react. Like right now, the Nasdaq bounced at the top of a range. I have my limit order at the bottom, but it bounced at the top of the range. And that's what's tough. I mean, that's what's tough, man. Through back testing, I was trying to discover which level to use. Because I mean, consistently, I see the market. It's just sometimes the market likes to bounce at the top a lot. Like 1 week, it will just bounce at the top, and it's like, okay, let me readdress my strategy. And then it goes to the bottom. It's like, okay, so it's now running through the top and going to the bottom. And it's like, well, they're not losing trades, but I'm giving the market about 15 points of drawdown, and then it goes in my direction. When I just could have just, I guess, waited for the market to trade to the bottom, and I wouldn't have given the market that much drawdown. I don't like giving them, I don't think anybody does, but I don't like giving the market 15 plus points in drawdown. I really don't. Even if I win the trade. So right now in my Tradeify account, I'm in this, I got in at 777. So right now I'm actually in this in my Tradeify account. I actually forgot that I set the limit actually there. And what I plan on doing with the Tradeify account is with the what is this called? The TPT account and my Top Step accounts. I've decided that I'm going to use my TPT accounts and my Top Step accounts to trade the bottom of the range. And with my Tradeify account, I can trade the top of the range. And I just forgot that I set that limit. So, I mean, right now I'm in profit. I was only 7 points in drawdown in this position so far. But we'll see if the market actually comes back into this area. My target is somewhere in this area. in this 15-minute imbalance right here. We'll see if the market continues here. But if it doesn't, so what I'm actually trying to track is, yeah, I'll miss. Like if I just stick to the bottom of the range, I'll miss trades like this. But if trades like this, if they work, but they don't go to target, I mean, it feels good to be in a winning trade, but if it doesn't go to completion, then I don't need to take these trades right here. Or if I take these kind of trades, then I need to kind of readjust my strategy to have like maybe a shorter profit target. So what's your current strategy, Dennis? What are you looking for when you come into the market? What are you looking for? I feel like now is probably, with how the market moves now, those that don't have a strategy, those that don't have their setup, those are the traders that will be affected by these markets the most, because once the candles are painted on the chart, everything is obvious, especially if you're trading the Nasdaq. But in real time, after you see a big move like this, it's hard to justify any short setup. It's hard to justify it, especially when we've seen the bears consistently fail. There's no follow through with bears. They just get aggressive in demand, but then when they get into supply, there is no bear to be found. Like right now, you see how the bears are getting so aggressive at this order block. This used to be a bullish order block, and they're getting so aggressive here. They got aggressive at this bullish 15-minute imbalance, but when you get into supply up here, the bears don't know what to do until they get into demand, and that's what's making this market very challenging, because you just don't know. You don't know if it's going to be, if this is the time where the bears are actually going to step up, and we're going to see a continuation to the downside. You just don't ever know in real time. So yeah, that's true. If this, then that. If this, then that. Yeah, if you guys were with me this morning, I should have taken those profits. I should have taken it. I didn't think the market was going to come back like this, but it did. And then at the end of the session, when the prop firms all closed their doors, That's when the market wanted to push higher. I could have made $300, but I had to settle for, I think, $90. I was up about $300 or $400 because we caught this. I mean, basically from the bottom to the top earlier today. We caught this move right here. Uh, we marked out this area this morning. We saw the liquidity build up with this range, this triangle right here. We saw the breakout from the range from that news event. It was so much momentum in this candle. I figured that the market objective of 30K was just around the corner. If the market continued to push, I was going to move my stop up and begin to trail. But we didn't get that. The market basically topped at this level. And then you can see that the market came, it opens up again, and we top at this level again. So we already know that once the market makes that rotation higher, the market is not going to. So honestly, I would say that the 30K market objective is no longer a market objective. If anybody believes that the market is going to stop at 30K, it's highly unlikely that it will stop at 30K. It's going to go higher. 30K is no longer the market objective. We have, look how many, 1, 2, 3, if you want to count these, 4, 5, 6, 7, 8, 9, 10, 11. So we have 9 touches at this area, and we have 2 failed touches, but we still see the rejection from the area. We have about 9 to 11 layers of buy stops above this high. So we have a bunch sell side liquidity or 11 layers of buy stops above this high. Once the market taps into all this liquidity right here, we're going to see this thing move. What I believe is going to happen is that we're going to have a reaction to a potential news event. All this engineered liquidity that's just sitting at these highs, we're going to just see this thing just shoot higher. We could go to 60, 100, 300. But the market is not going to stop at 30K. It's unlikely for all this liquidity to be above these highs just for it to go to 30K and we see a rejection. That is just highly unlikely. So I'm interested to see what the market does for the rest of the week. Honestly, actually look at that. Do we have any big news events? From what I've seen on social media, there was a peace deal, but I guess this peace deal was rejected. Now, this is information that I got from social media, and this is other creators talking about this peace deal today, saying that there was a peace deal on the table, but it was rejected by the Trump administration. Or it wasn't accepted. Wow. 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 I'm not even going to read that, but wow. Wow. Interesting. Okay. All right, so we'll see. See what happens here. Mm. You think so, Alfred? You think we see 30K tomorrow? I think, in my opinion, I think we probably see 30K probably Wednesday, Thursday. I think we see it Wednesday, Thursday, because they're going to need tomorrow to completely clear all these imbalances on the chart. Wednesday will probably be the setup, and then Thursday, Friday will be the actual move back up to take out these highs. I think the bears will probably be in control. We'll still have obviously the big bullish pushes, but the market needs to clean up all this. It's highly unlikely that the market leaves all this imbalances, because that means that this is all unfilled orders. All this liquidity just sitting down here, and the market doesn't clean that up. So you know what I'll do, actually, is this what, 850? I'm going to take profits on this position right there at that 15, at that order block right there, because what I'm not going to fight against, I'm not going to fight against this 15-minute bearish imbalance. I'm not going to fight against this short-term EMA on the 15-minute chart. It's highly likely the market comes into this and we see a rejection right back down. I'm not going to fight against this. So I'm just going to readjust my target to kind of front run this range. Sure, E-bomb, sure. Oh yeah, and then we got to fill that gap too. So that gap, that definitely has to be filled before, because like I said, if we get back up here and we run these stops above these highs, the market is not coming back down. Well, if it does come back down, it won't be easy. The bulls are not going to give up this move that easy. The bears are going to try to continue to short this thing. It's just going to climb higher, and the market wants to clean up this first. So Steve said there are no gaps on the 4-hour. You talking about that opening gap from yesterday's session? There's definitely a 4-hour imbalance though. But I guess you're right. There is that opening gap doesn't show itself on the 4 hour, but it shows itself on the 1 hour though. You don't think so, Steve? All right, so let's look at SPY. Again, this is not financial advice. I'm just speaking about what I'm looking at off the chart. Obviously, I wouldn't recommend taking any trades. I don't even trade options or stocks. And when I do trade, I trade in a prop account. Okay. Interesting. SPY. I forgot what I have to freaking do with this thing. It says show. Okay. It's like, my God. Interesting. Says maybe you're under S&P. Oh, okay. I guess this is it right here. Okay. Wow. Interesting. I didn't know that they did this on TradingView. I didn't know that they did that. Okay. Oh, so that's interesting. So is SPY not on this nothing no more? SPY. Okay, I was like, dude, where is it at? Okay, I found it. All right. All right, so let me turn off all this stuff. Well, okay. So I'm going to look at the 15-minute. I guess I'll turn off all this stuff real quick, so I can actually see what's going on. Okay. So if I look at the 15-minute, wow, there's a bunch of gaps on the 15-minute here on SPY. Let me look at the hourly. There's a bunch of gaps on the hourly. Wow, that's pretty interesting. And actually, you know what? I probably don't even have to do it that way. I can do it this way. So let's actually look at SPY, and then we can actually look at the dark pool levels. We can actually look at the option positions. Okay. So it's pretty obvious. This is SPY on the 15-minute, and it's pretty obvious that we've broken that uptrend. That SPY's been. So we got the break of the trend. We're seeing all these buy stops getting hit. So all these sell stops getting hit. We have a dark pool level sitting at 743. We have an other dark pool level sitting at 741. If we look at the options, yeah, sure, we can look at you said ETH USDT. Yeah, we can look at that. I don't trade crypto either, but I can definitely give you my opinion on what the charts are saying. So if we go to SPY, let's see what they're doing with SPY. All right, so yeah, for whatever reason, they're showing me expirations for the 22nd on SPY. Don't know why. Yeah. Was the 22nd this week? Hmm. So right now we are seeing puts, but it's mixed data in the options. It's a bunch of mixed data. We're seeing puts, we're seeing calls, but we're not necessarily seeing one direction. We did see some puts being swept, but I mean those already expired. These puts they expire in July. So there's not necessarily any real information coming in about it's not going to allow me to expand this page, but it looks like with SPY, it looks like so 745. So 745, I would have that marked out on your chart because it looks like that's the area. We have a lot of dark pool activity in this area. There was a lot. 742, 745. That's all the institutions we're trading at today with SPY. You can see, actually, you can kind of see it in the charts, actually. Yeah, you can probably see that a little bit better. Yeah, so it looks like they were transacting all at 742, 745. So I would definitely have that area marked out on your chart. It's not financial advice or anything, but I would have that marked out on your chart. Oh, hold on, guys. Give me a second. Let me log into this thing. I just realized that. Okay. When it's trying to be helpful, but It's not. Okay. 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 So 742. So they've done a lot of transacting at 742. So this range basically 745 to 742. And I guess that makes sense. We have a whole gap, and coincidentally, the 50% of that range kind of lines up with that candle right there. But you do have a double top rejection at these highs. That would be my only concern in this. If you're not going to take the short, I'll be cautious about taking a long. I would be cautious. If I were to take this short, I would need to see confirmation. I would need to see that pullback, and this would be somewhat of the money trade right here. That's the confirmed short right there. I'm not going to sell it as it goes down. I want to see a pullback. I want to see the bears hold it. And there goes that follow through. That's what I would look for. That will be your money trade. Double top, break of the trend. Yeah, that's what I would look for. Yeah. So sweep as actually, so with options, unlike futures, futures have a centralized exchange. So all orders are going through the Chicago Mercantile Exchange. It's going through one entity. With options, there's many entities where you can buy and sell contracts. So what usually happens is when you see a sweep, that means that if someone has a big order, they don't care who fills their order and they don't care how much it costs. They just want their orders filled. So they sweep all the exchanges to get their orders filled. And that's just to simply put it. And that's what a sweep means. And so when you see that the market, or when you see that it swept, it just went to multiple exchanges to get their orders filled. And that shows, or what that implies, is aggression. And something else that you would have to pay attention to is how much they're paying for these contracts. If they're paying at the ask, that's kind of normal. But if you're seeing that they're paying above the ask, like they're paying, so if the ask is $50 and they're paying $70 as an example, that shows that they really want to get into this position. So they're paying above the ask to get into it. So all this is just aggression. You can see that at 129, market participants were aggressively getting into calls. And then around 2 o'clock, market participants were aggressively getting into puts. And it was kind of going back and forth. And when you see something like this will be mixed data. You have one side, it's just basically, I guess what you would call the market would be unbalanced. Because we have the bulls and the bears fighting each other versus being on this, trading in the same direction. When you see all of this say puts, or all of this saying calls, they're sweeping, they're paying above the ask for them. It's usually an indicator that the market is going to go in that direction, usually. Now, when there's news or when there's an event, I have seen the market participants be in one direction. As an example, last week, there were a bunch of calls that expired worthless because the market kept going up. But for whatever reason, everybody agreed that the market should short. So it was all puts, but the market continued to push higher though. So you kind of have to take this information with a grain of salt, but that's only when there's news. For the most part, if everybody's short and there's really no news or anything like that, then the market usually goes short. I recall, I believe in 2025, as the market was going up, there were so many puts coming in on the tape or in the order flow. And this was on stream. We was streaming this, me and my trading partner, and it was like, why is all these puts coming in and the market was continuously grinding higher? The market hit their market objective and the market just crashed. All those puts made sense after that crash because the market did not recover from that. And it was the Santa rally. Everybody was so excited about the Santa coming to town. I guess Santa only showed up for a few people. And once he left, the market just crashed after that. Big drop. Thousands of points in one, or not thousands, but it's like a 500-600 point drop in the same session after the market grinded higher. Honestly, I've traded SPY options previously before I switched to futures. It's the main reason why I started trading the ES before I switched to the Nasdaq. Now I can't even I won't even touch the ES with the anyway. So this is a software. This is a software called Black Box Stocks. Black Box Stocks. I will say that when I joined this, and I don't know, it is very different from what it used to be. The great thing about this platform is that it does provide education. So it does explain everything to you. When this product first came out, it was competing with Unusual Whales and Cheddar Flow. This is the platform that I stuck with because it had gamma levels and it also had dark pool levels at the time. I'm pretty sure Unusual Whales and Cheddar Flow probably has that functionality now, but at that time, this was the only platform that had gamma levels and dark pool levels. So I kind of stuck with this one. And they claim that the way that they capture their option data, it separates multi-leg positions from single leg positions. Honestly, I don't even know if that's completely true, because I'm only looking for aggression. Or when I use this product, all I was looking for was what direction the market was going in. If everybody was in calls, then I was going to get in calls. If everybody was in puts, I was going to get in puts. I wasn't looking for anything extra. But now I mostly use this product for the gamma levels and the dark pool levels when I trade the Nasdaq. I like to know what kind of environment I'm in. If I'm in a positive environment, obviously buying the dips should be your strategy. If we're in a negative environment, you should be selling the rips. And that's what I use this product for. That's how I use it now. I don't trade options anymore. The only way I would go, the only reason I would go back to trading options is if prop firms go away. You really can't. I can put $500 into an option account, and that's not even a small account. That $500 can, as soon as you put that $500 into that account, that shit is gone. but I can use that same $500 to buy me a couple of prop accounts. I have more buying power. I have more opportunity. I can make way more money. All I gotta do is follow their rules and I can get paid out. And I can just rinse and repeat that. Oh yeah. But at the same time, you said, should you hold shorts? Like I said, I'm not here to get, I can't give you financial advice, but at the same time, I don't trust shorts anymore. I don't trust shorts. So you said USDT, ETH, USDT. I'm assuming that's crypto. I did consider trading crypto with Tradeify. I did consider it, but I just decided that I'm not going to do that actually. But I did consider it. Okay, so I don't see the USDT, but I do see Ethereum, US dollar. So I'm going to look at that. I don't see the other one. Unless I have it in the search bar wrong. Interesting. Okay. So this is a 1 hour chart on Ethereum USD. This does, I guess crypto is different. Crypto is different. I haven't traded Ethereum, but I've traded Bitcoin, especially Bitcoin futures. The one thing that I could confidently say, especially with Bitcoin, is that it's a bearish market. You have bullish moments, but for the most part, it's a bear's paradise. You can basically sell and it'll work. The reason why is fear and greed. And fear and greed, for whatever reason, results into a bear market. You see these big pumps, but as you can see, even though the market goes higher, you have these big impulsive moves that just get sold into, and it's just more lucrative being a bear versus, and it's hard being a bull in this market. All you have to do is short. So when it comes to the crypto market, I'm willing to trust the bears more. Now, when there's hype, obviously that's the only time where shorting the market is not recommended, but look how often this thing gets sold off. So right now, the market is in a downward trend. It's not financial advice, but I would sell that. I would be in this short. I would be in this short. You have a trend line right here. You just seen price break that trend line. The crypto market is naturally bearish. I would be in this short. We have a double top rejection. We have a lower high. We have all this liquidity, all this trend line liquidity that the market can use to short. I'm pretty sure that there's probably some levels over here that the market will probably try to target. You have all the EMAs slope to the downside. Yeah, I would be in the short. Looks like you got a range right there. But again, like I said, I'm not really familiar with this market. I'm talking about the technicals. Hopefully that helps. So we do go back to the market I am familiar with though. Nasdaq. Probably by tomorrow, I should have. Give me 1 second. Let me turn my display off and let me see if I can actually give me 1 second. Because I am in this trade, I do kind of want to let me see if I can connect to it. Even though I already have a Tradevata connection on. Okay. Okay. Yeah, it's not gonna let me do it. Okay. All right, never mind. I guess let me do this. Let me do this. Actually, I guess what I can do, let me do this instead. Let me do this instead. I guess I could just log in the Tradevate itself, I guess. Even I don't particularly care for the platform. Okay. All right, so this is my Tradify account. I guess I should have just. Okay. Okay. So yeah, I'm in this shit. That's why I don't like this damn platform. All right. Okay. It feel like I'm a rocket scientist or something like that. Okay. All right. So yeah, I'm in with 3 micro contracts at 775. I plan to take profits here at 840. We'll see. Mm, I don't like how this platform looks. You too, man. Have a good night, Alfred. And I appreciate that, Debt Wolf. My preferred entry is the 15-minute. I do trade on tick charts. My entries are on tick charts, but right now the 15-minute is where I do all of my analysis. I feel the 15-minute has all the information that I need to catch intraday moves. I also look at the 900 tick chart with the Nasdaq as well. Yeah, I don't like this product. I don't like it. I don't like how the candles look or nothing. Yeah, this is why I would never. Okay. All right, so I think this is my. Okay, so that's VWAP apparently. That's VWAP. So I usually have the 200 EMA on this. Okay, so I don't have that. Moving averages, EMA, 200 EMA. If you don't have the 200 EMA on your chart, you should consider adding it. At least the 200 EMA. If you're someone that doesn't care for EMAs or you like to have a clean chart, I would recommend having the 200 and VWAP at least on your chart. I don't trade with that. If there's no EMA on the chart, at least for me, I have no clue where I'm at. I have no clue where I'm at on the chart if there's not at least a 21, 50, 200 EMA. For me, I don't necessarily trade. I don't consider VWAP. My strategy basically is the break and retest. That's the trade that I consistently look for. I look for a range. I look for a break of that range. I trade the pullback into that range, looking for a continuation move. So VWAP has little to no influence on that. So I don't have VWAP on my chart because I don't take trades where the market is kind of going down. And if the market bounces at VWAP, it's highly unlikely for me to take that trade. Yeah, sure. So Deadwood asked, he asked, why did I take this trade? Well, let me get off this chart because this is why I don't like Tradeovate. So it's on my tick chart. Let me see if I can find it. I'm pretty sure I can find it on the 1 minute. All right, so there it is right there. Let me make sure. Oh, that's not it. So this range right here, there's a range right here. And that's the basis of my strategy, is looking for ranges and looking at the market, or looking to see where the market is going to react. And this is why, and I was talking about this earlier about my strategy. I look for ranges, and it's either going to bounce at the top, it's either going to bounce at the middle, or it's going to bounce at the bottom. And the Nasdaq is very inconsistent about which level it bounces at. And when I say level, that's what I'm referring to. The top, middle, or bottom of a range. The range is literally the foundation. I don't take a trade unless there is a range. It was a breakout from this range, and I'm looking to trade the pullback into this range. Now, the reason why I didn't take the trade that I'm in on this account, as I explained earlier, because the Nasdaq is very inconsistent about which level it wants to bounce at, I dedicated that other account to only take the top of the range. And I want to see if it's even worth considering taking those trades, even though they work out. Because if this trade doesn't hit my profit target, even though it was right now is a sniper entry, and if it comes back and it fills this order and I get my profit target, and then it goes to my other profit target, what that does is kind of alleviate the need to consider, because obviously it's a fear of missing out. I hate when the market bounces at the top of the range. It goes in my direction to fill a profit target. And then I was like, damn, instead of just waiting for the bottom of this range, I could have just traded at the top. And that's why I took this trade. It was just the top of the range. So I have a 27-point stop on all of my trades. So my stop, so at my entry is at 777 3/4. So my stop is at 250 or 750. It's a 27-point stop, which ironically would be my entry for the bottom of the range. Ironically. So you're targeting 757. So you're short from 819. So you just basically just got in short, and you're targeting 757. So what I'm gonna probably do in this situation is, if we don't see the market push higher here, I won't let this thing come back and stop me out. I'll probably put my stop probably at break even. Probably give myself a little bit of points here. If we see a big drop, I'll probably get out of this. Because you know what, Rob? This does look like this could be a really good short right here. Because this is just this previously was a bullish order block. The market broke down from this order block. It came right back into it, and it could now be a supply or a bearish order block now. So yeah, you could be right. 757 though. 757. Yeah. I mean, shit, in order for you to get your target hit, in order for me to get this order filled, you would have to get your target hit. So, hey, yo, what's up, Vintage? How you been? And you know what, Vintage? I've gotten to that point too. I hate shorting this market. I absolutely hate shorting this market. I wouldn't recommend it. I've gotten to the point now where I'll just wait for the pullback into bullish structure. I'm just gonna wait. And I don't know if Investor Z is with us tonight, but I realized that, I mean, well, I didn't realize, but he shared earlier today that he was in a short, and that stop run higher caught him and everybody else that was trying to short this market. And that's what's scary about being in a short. That's what's scary about being in a short. You got all this momentum to the downside. It creates a range, a triangle. And then the market just shoots higher. This was kind of random. It was kind of random. I mean, we did hit, we did enter here this morning. It did pull back into a bullish range right here. That's why I took this, or I mean, obviously I didn't know at the time. It was just a good area to get long, so I took the chance here. It was a good opportunity to get long. It created a triangle, a range. And everybody that was short this was used to fuel this market higher. And then the market went down. And then it pops right back up. And then it goes down. And you kind of have to wait for all of this to happen when you're taking a short in this market. And in real time, how are you going to be able to see that in real time? You have to be very patient. And patience combined with trading the Nasdaq usually doesn't. Patience and trading the Nasdaq doesn't really go together. I'm not saying that it's not possible. I'm not saying that traders don't do it. But with how fast the Nasdaq moves and how quick you can make money, I guess it's just easier to trade what you see and just go with the flow of the direction of the market. Yeah, and Vintage, I definitely agree with that. I definitely agree. That's why I've reduced my size, and I feel, and if you're also, for those that are finding it difficult to trade these markets, the biggest unblocker for me was reducing my size to 3 micro contracts. As crazy as this sound, we made 10K plus across accounts last week. And all we traded was 3 micro contracts. Just 3. Every one of my positions, I'm risking $162, $67. And I'm shooting for $500 per position. I watched this very powerful video by Trader Drysdale, and he explained in that video that our nervous system is not equipped, it is not designed to operate under so much pressure. When you put on heavy size on these accounts, especially trading the Nasdaq, your nervous system goes into overdrive. You're not paying attention to what's happening on the chart. You're only focused on if the market is going to stop you out and how much damage is that going to do. And what usually leads up to trading on tilt is when you're oversized in a position, the market stops you out, and now you're in I need to get that money back mode, which leads to trading on tilt. You have cortisol pumping through, cortisol, adrenaline, dopamine, all these chemicals that are just flooding your brain, sending it in so many different directions. It's hard to trade under those conditions, especially with a fast moving, non structure respecting instrument like the Nasdaq. Yes, yes. I take more trades. I'm not afraid of my losses. I lose $160. It's a 27-point stop on 3 micro contracts. I have at least a 92-point target that consistently gets hit. We missed it this morning though. The market fell short of 92 points right here. We missed it. We caught this move this morning, and but my target was above the market's objective up here. So we missed that. I mean, sometimes that's going to happen, but if the market comes back to my stop, I only lose $162. I'm not going to cry about that because I know if the next trade works, I'm going to get that money back. It's a 1 to 3 or it's a 1 to 3, I think. Yeah, it's at least a 1 to 3. So I'm not going to cry about that. And this is why I don't take short positions right here. I think the market continues higher here. The market has now engineered liquidity to take out these highs. I mean, if the market runs this high, we might get a stop run right here, get a pullback, and then a continuation. I think the market wants to come into this. What is that? This is an imbalance right here. I think that's an imbalance, or maybe that was just a. Let me just delete that. I don't remember what that is. It's not even marked or anything. And if we look at Bookmap, it does look like it wants to break this indicator. This is a trend indicator, and what this indicator tells me is what side of the market I should be focusing on. And I will say this: ever since I got this indicator, it has kept me on the right side of the market. And what I consistently see with this indicator is that the bullish trend gets respected, the bearish trend does not. The bearish trend does not. And you can see that it's highly likely that this bearish trend will get broken. And it will run all the stops that's above this trend, and we could potentially push higher. The bullish trend right here, this yellow line, when the first defense, so it's like a 2 trend system. This is the first line of defense. If the market breaks this, then it suggests that we could see a bullish reversal. This is the last line of defense. This is where all the stops are. If the market takes out this trend, we will see a stop run. I see that consistently. But if the market holds this area, then we usually see the market trade down. At least that's what I observed as I watched this indicator on Bookmap. And then I can also see, you can really see that the orders, like right here, the orders are just right there, right above that. So I mean, even if they do run that trend line right there, we do have a pool of liquidity right there at 40. We do have a pool of liquidity at 50. We do have areas of liquidity above right here. So I mean, with the market bouncing where it bounced at, we could see the market kind of go higher, kind of take this liquidity, and we could potentially see a move down. But that would require the bears to step up. How often has the bears stepped up? They don't step up anymore. They don't. So, I mean, at this point, it's just easier to wait bullish, for the market to just trade into a bullish structure and then trade there. It's just easier to do that. It's less stressful as well. I'll probably give this position a few more minutes and then I'll probably just cut it, honestly. I don't necessarily, I mean, we're almost at target. My target is at 840, price is at 818. I'll probably cut this towards the end of the stream. Like when we end the stream tonight, if we don't see the breakout, then I'll just cut this. I'll leave this position on. But I'll just probably cut this position. But I'm gonna try to figure out. Okay. All right. Looks like we're going to see that stop run above that trend. Actually, let's watch that so y'all guys can kind of see what I'm looking at in real time. Yeah, and Rob, with that, so my Top Step account, so I have Top Step accounts that I've had since January. My risk to reward has kept that account alive. I had a string of bad trades on gold. I had like 6 losing trades in a row. I only take one trade a day. My risk to reward is at least a 1 to 2, 1 to 3. So 3, it would take 1 win to take out 3 losses. And I think April was just a bad month in that account. I thought I was going to lose that account. But 1 win took out 3 losses, 2 wins took out 6. And just like that, with just 3 wins, a few wins, was able to get back on track and continuously get paid out in that account. All right, so it looks like we could see the market kind of break out here. This is the line that right there that I'm paying attention to. You can see the heat building up. You can see the bears trying to protect this area, but with this momentum, that doesn't look likely. Actually, what I should do is actually this, so I can easily see it. There's a depth of market. Yeah, CVD has turned positive. Can you guys see that? No, you can't. Or you can barely see it. Yeah, we're starting to see CVD get positive now after it being negative. So now that means that says that there's more buyers than sellers in this market right now. I just, like I said, I feel like that might be temporary. I feel like the market, I mean, if that was the bottom and we do see the market push higher here overnight, I honestly, I wouldn't be surprised by that. I mean, the bulls, the bears are they just suck. They suck. All right, so the depth of market kind of tells me we are seeing all this selling, but the bulls are holding the fort right here. They're holding it. So we'll see if the market pushes above this, and we'll see if we just run some of this liquidity above this area right here. We just run this liquidity right here. We'll see. So Rob, I'm no better than anybody. I'm not better than anybody. I had to travel the long road of losses to get to where I'm currently at. So I'm just like anybody else that's consistently profitable. It's a journey. The reason why a lot of traders only take 1 to 2 trades a day is because of trading is trading is easy. What makes trading difficult is your emotions. And we're talking about our quote unquote caveman emotions that keeps us in an emotional state. And our brain likes to play tricks on us. Just think about how your brain performs mental gymnastics to see what it wants to see. If you lose a trade, what's the first thing that's on your mind? I want to get my money back. You're not looking at price action anymore. Your plan is out of the window. Just like what Mike Tyson said, as soon as you get in the ring and you get slapped in the face, hit in the face, your plan goes out the window. It's the same thing in trading. From what I observed through my trading, that second trade is I'm just giving more money back to the market because I'm not patiently waiting for the market to reset itself up to make my money back. My trigger is once I lose my money, I want to make that money back as soon as possible. So I create a fake setup in my mind. Oh, that looks like a double top. Oh, that looks like a double bottom. That looks like a breakout. Let me take that trade. And that's usually the wrong idea. The market is efficient. The market has been engineered to work against your emotions to extract as much money out of you as possible. And that follow-up trade is usually a loser. So if you get into the habit of taking 1 trade a day, actually, let me just show it to you. Let me just show it to you. Let me just show it to you. I've had this account for 5 months. You can see that the month of May, I would have lost this account in April. You can see that I only lose the same amount each time. And this is when I had this string of losses, but my wins always took out my losses. The days where like the day that I took 2 trades, I just gave more money to the market. When I took 1 trade, my wins were manageable. When I took more than 2 trades, my trades were just huge. Take 2 trades, I'm losing 3 trades. I'm losing way more money, and I'm giving back to the market versus just saying, you know what? I lost the trade, and then look at that. I'm getting the money back. $2,000. I was trading silver. I was gambling silver this day. I remember this day. Man, I almost lost the account this day. That's why I remember this one. I took 12 trades, and this day right here was kind of like the seed that planted that idea. Like, okay, I just need to take 1 trade because I had a big trade I should have just closed out, but I didn't. I wanted to make more money. Silver was going crazy. It was the payout day. I was like, man, let me see if I try to get some more and get paid. Man, silver went against me. Good thing I had profits because I had to use the profits to stay in this trade. And it got to the point to where I almost lost this account. But silver showed me mercy. The market gods was like, nah, we're not going to do it to him. And I was able to get $2,200 in this trade. And I locked this account so fast. And you can see that after that day, I stuck to the one trade. And this was 4 trades, but I only lost like $126. But you can kind of see that I still kind of, but for the most part, it was only one trade a day. And just taking one trade a day, win or lose, I can keep the account longer. Yeah, I appreciate that, E-bombs. Hopefully that's helpful. Hopefully that answers your question. Like I said, if I deviated from my plan in April, like for whatever reason, April was just not the month for me. I took so many losing trades in this account. I thought I was going to lose it. I really thought that I was going to lose this account in April because I really don't know. I don't recall why April was such a difficult month for me.
Connection lost.
But it was.
Connection lost.
But with May, shit, we brought this account back. We brought this account back. We brought it back. And so I'm happy about that. Hopefully that helps. Okay. All right, so we did see price kind of break that. Oh wow, did my okay. All right, that's gonna probably be. So I'm gonna cut this position. Like I said, I'm gonna cut it. That is interesting. That is interesting. All right, so I'm gonna cut that position. I'm gonna cut that position right there. Now the market could continue to go higher. Like I said, the only reason why I'm cutting that position is because I'm not going to allow it to play overnight. I'm just not going to allow it to play overnight. I want to go to bed and I want to go to sleep. So. And I definitely agree, E-bomb. You kind of have to figure out how you want to approach the market, and it has to fit your personality, and that is the key. You have to find a strategy that fits your personality. Alfred, y'all guys probably, so I think Terry 100 had him on her stream. He's been interviewed. I mean, Alfred is very prominent in this community. I think every streamer knows who Alfred is. I think everybody knows who Alfred is in this community. Alfred's style is 100% different than mine. I prefer low risk, high reward trades. So my trades I usually, for the most part, my biggest size will be maybe 1 mini with a 27 point stop and with a 1 to 3 target. Alfred, on the other hand, he's so different. He likes to get in, he builds his position as it goes, and then he adds to his position as it goes in his direction. He trades TPT. He's taken out so many payouts from them. I'm surprised they haven't banned him from how many payouts that he's taken from TPT. Totally different styles. It's a more of an aggressive style, but it works for him because it fits his personality. He takes his profits Me, on the other hand, anything less than my profit target is unacceptable to me. And that's just a part of my personality. I feel that if my analysis is correct, and I guess if saying it out loud, it does sound like this is an ego trade and I need to be correct. But if my analysis is correct, and if price is going to go to a certain area, that's where my profit target is going to be for the most part. Also, my profit target is a P&L profit target as well, meaning that this is the amount of money that I need in order to meet a consistency rule or to pass an account or whatever. So it's a P&L target combined with I want to get as much of this move as possible so I'm not in and out of trades. It's a lot of layers. It's a lot of stacked on it. I hate getting in and out of trades. I hate scalping. I hate the dopamine hits, the consistent dopamine hits that you get from scalping. I feel so scattered afterwards. It's not for me. So I prefer to get into one position, hold until target, document that trade, and go to the next one. Alfred, he likes to scalp. So I feel like that's the first thing that needs to happen, is discover who you are and who you want to be in these markets, how you want to make money, what you're comfortable with. You have to be comfortable with the size that you're trading. If you're scared that your stop loss is going to get hit, that means your position is too big. And if you trade based on your account size, you'll see more success. You'll feel comfortable taking more trades. And if you play this game correctly, you can increase your size as your account balance grows. Excuse me, I apologize. Let me say that again. If you play this game correctly, you can increase your size as your account balance grows. One of the biggest mistakes that I've made is thinking that I need to make everything all at once, when this game is going to be around forever. You have basically your entire lifetime. The stock market is not going, or the futures market is not going anywhere. Whichever market you trade is not going anywhere. You have your entire lifetime to trade these markets. You don't need to make it all at one time. So if you have to reduce your size, do that, trade responsibly, and you'll see yourself grow over time. Those were my biggest blockers. The things that I've just shared. I would trade 50K accounts with 3 or 5, 6 minis, and I was successful and I was unsuccessful. But I'm kind of glad that I'm now trading with risk management and protecting my capital in mind. So yeah. But all right, guys, I'm going to end the stream here. I do appreciate everybody that joined me tonight. I will definitely come back tomorrow morning, and we'll definitely look for more opportunities to earn some more money. And with that said, peace out, everybody.